Hey traders, welcome to MTI's Market Update. This is Kevin Dixon, Senior Trading Analyst at Market Traders Institute, and you're really going to enjoy my conversation with you today because I'm going to give you one of the secrets to selection in the stock market: sector rotation and seasonal consensus trading. Now let's define what that is. A sector rotating into favor, a sector rotating out of favor, and rotation, the process of moving into an approval rating or a disapproval rating. Now there are certain times of year that some sectors are going to move better than others, where we're talking about retails, oil and energy, home builders, all the different sectors that are out there, from your basic materials, your metals. Everything has a schedule. And yes, indeed, there is a method to the madness. So I'm going to take you today to a sector I'm watching in rotation right now because it's August. You know what that means? It's beginning to look a lot like Christmas. That's right. I'm talking Christmas right now in August. And I learned this because retails start their sector for Christmas rotation early. So if you'll notice, August, September, you'll go into the store, there'll be this display, and you're in Santa Claus. Now at this point, I want you to feel some passion for the people that work in the retail industry, because you have to admit, they're going to be pretty sick of hearing jingle bells by the time September, October, November, and December finally rolls around. You'll be tired of hearing all the Christmas carols that are going on. So I'd like to thank everybody that works in our retail industry for being a good trooper and sticking it through. Behind me, I've got a chart I want to talk with you about. This is XRT, X-Ray Romeo Tango. It's made up of stocks that are retail within the S&P 500. Today's candlestick is 52-week highs here. We got some strong Fibonacci strength. You see a lot of pattern disagreement that's going on. But why retails this time of year? I've kind of delved into it a moment ago, and I'm going to share a chart with you here as well, because Christmas occurs a few weeks out in the retail sector. Here's one that we've been looking at on opening bell: American Eagle Outfitters. This, Urban Outfitters, Macy's, Kohl's, Costco, some of your big name companies that are coming out there are going to lend you extreme price opportunities between now and October. I learned that the seasonal consensus trading began in August, late July to August, lasted through September, lasted into October, and started to lose a little bit of steam into the end of October. So we're talking about an opportunity to make plays for about the next 45 to 60 days in market within the retail complex and industry. Now, a few of these are going to be reporting earnings, so make sure you do your homework. If you don't like what you see, take the money and flee. But I'm actually talking about holding many of these through, in fact, the earnings event. So that's the risk that you would take. But if it's risk you're going to take, it's profits you're going to make. Let me show you why. Going back to the charts on AEO here, I like the $25 long call. I've got targets projected just below the $30 mark, around 29, 29 and a quarter. So what we're trying to do is actually get this near and above $30. Now, AEO, we know that this is a really great looking chart, new 52-week high. So the chart alone would be a reason to consider buying the stock. But the seasonal consensus of sector rotation into favor for retail is the real reason for being here. This is Macy's. Macy's is the leader. Look at this. I've been waiting for this setup going back to the beginning of June. It triggered today. And look at that, breaking finally above the $41 mark. It's up just about 1% today as it begins its seasonal run. Here's another few that we're going to talk about here for you. Kohl's, Kilo, Sierra, Sierra. Look at this, forming the potential for a cup with handle pattern. At this, we're still waiting for it to break a little bit, just below the $80 mark, probably about another point to get a go time move in there. And here's one that's reporting earnings this week: Walmart. Now notice the charts on Walmart. Walmart is a leader in industry. Walmart is attempting to ramp up their competition to be in the same arena as Amazon, and Amazon owns everything. Amazon set new 52-week highs today. Amazon got to $1,925 at Monday's close. And I told you this is going to go to $2,000, so don't get caught snoozing. If you want to make some money off Amazon, get some of those call strikes out, buy plenty of time in the money, and make that money before it goes to 2K. It's going to go to $2,000 and split. That's what I told you. So here, Walmart doesn't show the type of leadership that you expect a leader in industry to have, because Walmart is a dividend-paying stock. The market tends to price it. It's actually coming up off lows there. So what their earnings, are they going to blow their earnings out 10 to 15%? No. The answer there is no. That's actually going to probably be maybe a 2-3% move. Walmart can influence the retail group that much? Not really, only perception and maybe a little bit of conjecture. But aside from that, no reason to sit there and bet all in on that. As far as a trend trade goes, Walmart is not it. Let's take a look at another few, and then we will move into another piece of our conversation. This is Urban Outfitters. You'll notice I've focused a lot on some of our retail clothiers, some of our clothing stores and things like that, because this is where I'm seeing leadership at this point. Electronic Arts is another good name, but Electronic Arts didn't do too well, and so once again, not going so swell. This just below $49. We've had Urban consolidating for an extended period of time. Yesterday's candle was important. Today, overcoming a gap down is also very important. So I'm going to keep my eye on Urban within the next few weeks. We advance above $50, buy a 45, maybe a 47.50 long call, and ride this on out into some new market earnings there for you. So I've shown you some retail sector rotation and seasonal consensus trading. As you can see, there's something to it. Look at all these charts that are moving up very bullish, and you can see that we're definitely in the season for retail consensus trading. Pretty smart. Now, since I've shown you an example of things that are moving up with seasonal consensus, let's talk about things that are rotated out of favor. I've got the home builders up there for you, so I'm going to go into the home builders for you right now. Let's get into the charts here, and we'll take a look at those. And check this out. This is XHB, a home building exchange traded fund. And just to explain, look at this chart. It is low to the right. Now, seasonal consensus in home builders, here's why we're not really seeing a lot of buyers out there right now. Because this is not really an active time for home building, or selling homes as well, rather. The real active time for buying home builders is between November through May. Think about it like that, really. February, March, April, May, good time to play home builders. And the reason for that is people typically don't move a lot during the school year. If you have school-age children, you don't really want to up and move in the middle of the school year. Makes sense, right? It makes sense. Also, the winter months aren't very good for home builders because people don't tend to sit there and move in the middle of a blizzard. Makes sense, right? And that's what sector rotation's all about. It makes logical sense. And once you discover how this can really help you with your trading, it's like a light goes off. As many lights as go off as we would see on a Christmas tree. Let's take a look at a few more of these home builders. I just want you to visualize what I'm talking about. Every one of these are at the lower end of their trading ranges right now. So let's go ahead and take a glance at Pulte Group. It's on the lower end of its trading range even right now, right? Let's take a glance at Lennar. These are industry leaders. Look at Lennar. The highs in Lennar there were December. We had a little spike in March, April, May. And then the rest of the play has just been on the sell side. It's pretty brilliant because you know exactly when to short sell and when to buy. Look at KB Home. KB Home had itself a little bit of a spike during the summertime, but here we are in August, right at the end, right down low, and that's where all the short plays are even now, just listing near and toward 52-week lows. There's always one that goes the other way, though. This is D.R. Horton. D.R. Horton bounced up off lows from a week ago. As you can tell, we get into a little bit of earnings impressions there. But the thing to take away with sector rotation is that it is a thing. It's a thing that can help you learn to discover when to buy or when to sell or when to stay away when something's in transition. Now, either way, that's good information to help you make some money. Now, let's talk about some of the stocks that are reporting earnings this week. I'm going to take you into today's calendar. We had Tapestry.com. If you've ever bought a Coach bag, this is the company that owns Coach. And so Tapestry, pretty intelligent name. Tapestry's moving up very well on the day. It was a huge gap up. And you have these names like Tapestry, Switch, names like that that are going to move very well. Here's a few more to show you on earnings for today. And we'll pop right on into our next few. This is Cisco. Cisco's reporting after the bell. And again, Cisco is one of those stocks that doesn't really shake up the marketplace with earnings. The earnings are not going to drive a great amount of price passion into what happens within this chart. I'd be surprised if it even moved 4 to 6%, because that would be a shocker right there. And here is another one. Who ya kidding me? This is Huya. Huya with a mighty gap down. Huya, 20% on lower down trade. Now again, these are the type of things that really move big on earnings. Growth stocks. When growth stocks disappoint, the market reacts by putting it down. And that's just the way it goes, because growth stocks have the greater potential for price capitalization, for market capitalization gaining, and for having a higher positioning at an earnings event, because they take most of their money, pretty much all of it, and invest it in the growth of the company. That's why stocks that are dividend-paying stocks very rarely break 10 to 12% on an earnings report. So when I'm going through the process of selection, choosing the right tomatoes for what I'm going to do day trades on, or what I might straddle, what I might strangle, then it does come down to whether it's a growth stock for that potential to lend a little more pop, on the event of earnings. Let's take a look at a few more here, and then I'll let you have the door. And here's where we'll go take a glance at, we've got there's Tapestry, here's AMD, NVIDIA. NVIDIA is the big earnings event that's coming up after market close today. Now, NVIDIA, during the last few years, had just been on a complete tear. A lot of our semiconductor stocks were moving really strong based on filling out the Internet of Things with blockchain technology, with institutions moving into cryptocurrencies. The Internet of Things is becoming the big deal, and so is the speed of your processor. This is Advanced Micro Devices, AMD. Now, we talked about the Internet of Things, how important it is to get speed increasing, moving into faster technology to make transactions happen faster. That's what all about here. And AMD has recently taken off on a big tear. Look at this, folks. The last few weeks, it's went from $9 to $20. You realize that's 100% ROI in just a few months. An extraordinary amount of momentum on AMD. Now, it pops 20 again. I'm looking at doing a long call. And I'm not talking about calling my mom. That's a long call in layman's terms. I'm talking about using the opportunity to go long the call strike in place of buying the stock to use the leverage of an option. Maybe look at an $18 long call to January, capture 3 to 5 points off AMD. I think that'd be a very satisfying trade. Another couple of items to look at here for you as well as, again, earnings after hours. We've got a couple of more charts to look at, so let's get right into our next one here for you. I'm still laughing about Tesla, so I'm going to give you some giggles on Tesla right now. Now, Tesla, yeah, Tesla. Okay, that's funny. Now, are we going to go private or are we going to stay public? Wheeling off of that, Elon Musk has said that Goldman Sachs is going to help him go private. He also said the Saudis offered to help him go private. I think he's working in collusion with Russian hackers personally to go private, but then China's maybe a big player, but then you never know. He might actually put a list out on Craigslist to get some help, or he may actually put Tesla up on eBay. Either way, taking it private right now, breaking securities laws, and I think we're throwing things against the wall to see what sticks there. Elon, you know what sticks? Making cars. So keep making cars, and I think your shareholders will be happy. Then you won't have to worry about being accountable because you're living up to people's expectations. I know that's funny. Let's take one last look at the charts, and then I'm out. And we'll go right on into the last one for you that I'm going to view today, which again is Cisco. I partner back on Cisco just because you look at leadership stocks like this and they get range bound for such an extended period of time. You wonder what is the potential for growth there. But Cisco has made a lot of acquisitions over the last few months. The price is consolidating. We're going to take a look at that in their earnings release. Remember, folks, we've only got about a few more weeks left in earnings. There are only less than 200 stocks reporting this week. 2 weeks from now, we'll start to even see that list getting narrow as the retailers come to play. Either way, keep your eye on the ball. Make sure you know when the companies that you're trading, owning, or investing in report. That way you can avoid getting caught in a pitfall of not understanding why the price could be moving. Either way, have a great day, and I'll catch up with you on the very next time. With Market Traders Institute, this is Kevin Dixon. Thanks again for tuning into the Market Update. We'll see you next time.